Welcome to the RJLT Economics. In today's podcast, I want to go over three separate macroeconomic issues that are somewhat related. First, I want to talk about the global inflation situation. Second, I want to go over China's housing bubble. And finally, I want to discuss Russia's demands to sell its natural gas in rubles. First, with regards to inflation, we have seen new data showing that inflation in the Eurozone has reached record highs. Specifically in Germany, the previous high was reached in 1981, and I'm pretty sure that within the next 2-3 months, we will see record highs since maybe the 60s in Germany. And of course, we have also seen data from Spain showing inflation nearing year-on-year 10%. And this, of course, is a inflation number that is understated. There's a very good reason that governments want to understate inflation. And this is discussed in very concisely and very brilliantly by Milton Friedman, who was a central banker from the United States. And I would like to refer you to that talk, which you can find on YouTube. By the way, I found it there. And he will explain to you exactly why governments want to understate inflation. Now, the root cause of this inflation, this bout of inflation, is none other than quantitative easing. Quantitative easing basically is money printing, and there is nothing new to it. Before the fall of, I would say, 80% of the empires in the past, money printing has been used as a panacea for all the social ills, all the deficiencies in the military, and all the disasters or natural disasters, and all the incompetences of the leaders, and also the decadence of the public. Right? It was It was very common. I think it's much rarer for an empire in the past to fall without some form of money printing preceding it. A good example, by the way, and this is a digression, an example of an empire that didn't fall by inflation, I think it was the Mayans and the ones from the civilization that was focused on Mexico. I'm very sorry I forgot their name, but that was a very brilliant civilization. These civilizations fell because of the European colonization, but a lot of the other European and Asian empires fell after a period of money printing. This is a digression, I'm sorry. And we are seeing primarily in the Eurozone a focus on the most important items that have seen huge increases in prices are food and energy. I think also used cars. While in the United States, it's food, energy, housing, rent, used cars, new cars, services, everything. And this is a phenomenon that is rather predictable. I think I've discussed this in a couple of my previous podcasts. Namely, as the world starts to de-dollarize, a lot of the money that America printed and sent abroad in the last decade would flow back into the United States, into the US economy to beat up the prices of everything. And so I expect that in the coming months and years, the US will experience higher inflation and faster fall in living standards than almost everywhere else in the world. This is simply a process, a result of the dollarization. But nevertheless, in the Eurozone, the situation is not much better, because the euro can be construed as a viable, can be understood as a viable currency, an international hard currency, or otherwise known as a hard currency, purely in the US dollar-led system. Without this US dollar-led international financial system, the euro is not viable. And I have stated and explained in one of my previous, I think more than one, several of my previous podcasts, that I believe that the euro would cease to exist in the coming years. And inflation is going to be a trigger, because as inflation goes up, we're going to see that unlike it was, let's say, in the 70s and 80s in the United States, where interest rates could be bumped to 20% to combat inflation. Now I think in the Eurozone, which has a higher debt burden than the United States, in a lot of its southern countries, member states, and these southern states include France, right? This is not really the quote-unquote pigs issue. It's not this periphery issue. It is in the core. France has since the disease situation has been printing money crazy and spending money like a drunken sailor. So France has this problem. I think 160%, close to that percent of GDP, national debt. And of course, the French Social Security and all these funds are losing money, bleeding heavily as well. So we will see that in the Eurozone, there is going to be a very bloody situation. Another thing that we are seeing is that whereas in the last, I would say, a couple of weeks, we've seen what I would call a dead cat bounce in the stock market, in the equity market. Now, I think this week, we're seeing a renewed fall, renewed trend, or the trend resume, and it is a downtrend. This is obviously not surprising at all, because after a severe fall, usually the market retraces a bit. The shorts cover their gains, and a lot of people who have been holding their guns get impatient and want to get in. So there will be a dead cat bounce. But make no mistake, I think in the stock market, we're going to see continued fall, particularly in the Eurozone, where the economic outlook is really dire. But I think eventually, as the economic situation worsens in the United States, the stock market could also fall in the United States. But it is less sure. Why? Because as I said earlier, and I explained numerous times in my previous podcasts, as more money in the de-dollarization process flow back to the United States, a lot of that money will go into the equity market, and that means that there will be more money bidding up a lot of the stocks. Having said that, a main reason that I'm suggesting that as inflation goes up, stock prices will fall is it's threefold. First, It is because the fundamental economic situation will worsen, that the companies will be less able to pay dividends, and that means the value of those stocks are falling. Secondly, as inflation goes up, people, small investors who need to spend more money on necessities will have to sell some of their financial holdings in order to sustain their lifestyle and perhaps already a diminished lifestyle, but nevertheless they need to get some cash to spend, right? And thirdly, as the overall economic outlook worsens, as the fundamentals gets worse, and as people have to pull money out of the equity market, there will be a general shift in the mindset. I think the mood will change in the stock market will change. There will no longer be a lot of these FOMO type of moves, but there will be more about fear. And as fear sets in, stocks will just fall. So basically, in the beginning, there will be a lot of bounce. As we witnessed earlier this month, the bounce was quite high, but the next time there will be a bounce, the bounce will be less, and the next time it will be less, until it will stop bouncing and it will just fall. And the fall will be tremendous, and that is when fear sets in. That there will no longer be people, or no longer be a lot of people who are confident, who have this FOMO, fear of missing out, but instead it will only be fear that if I keep on holding this, I will lose money. So I will sell everything. And when that mindset sets in, we're close to the bottom. But I think we are very far from there. And I don't think, by the way, in the meantime, I don't think either the ECB or the Federal Reserve will be able to raise interests. They will not be able to raise interest because debt levels in these, whether it's in the United States or in Europe, in the Eurozone, are unsustainable, exceptionally high and rising. And there is no doubt in my mind that there will be a reckoning, even if they don't increase the interest rate. I don't want to repeat myself too many times, so let's stop there. And since we're talking about quantitative easing, money printing, and reckless monetary policy, let's move on to the second topic today, which is China's housing situation, housing bubble. This is another situation of recklessness, of exorbitant, it's not exorbitant. It's exuberance. It's another irrational exuberance. That's basically a very good example of, right? When the housing prices, and when we are talking about houses, apartments that are of very questionable quality, right? A lot of them are built without much care in terms of quality and durability. So we're talking about this type of stocks, right? This is the type of quality, this type of value. And the affordability of housing in China is one of the worst in the world compared to average income. This really is spectacular. And I think a lot of people have explained in detail how this came about, right? I think a lot of it has to do, let me just very briefly go over some points. I'm sure I will miss a lot, but I think a couple of points that we must keep in mind is, number one, the GDP numbers. The governments, whether it's central government or local governments, want to see high GDP numbers and high GDP growth. And so printing money and speculating in real estate is one of the fastest ways to boost, to spice up the GDP numbers. Secondly, also it has to do with the fact that a lot of the local governments are using the sales of land as a way to finance their expenses. And of course, the third one we must say is that a lot of government officials, local government officials, take a lot of bribes, and they want to make money. And this groovy train can, as long as it continues, they will be able to make a lot of money. Right. So these are the reasons why China has got this big housing bubble. But it has become so big, and I think proportionally perhaps even bigger than Japan's housing bubble in the 1980s. I think there can only be a single end, which is a deflation. There's going to be a deflation in the housing market and perhaps also in the entire economic system. And this is also why China has been printing a lot of money. China has been printing a lot of money, but at the same time, consumer prices are not going up. If it sounds familiar, well, it is very similar to Japan's. What Japan has experienced, particularly in the 1990s, and we're gonna see. The question is whether China will continue to see good levels of economic growth. A lot of people are pointing to the demographic issues in China. I don't think so, and I've explained my view numerous times. Obviously, I must preface this by saying that the Chinese government does not agree with my view. The Chinese government thinks that more people is better, obviously because it will be able to a higher population number will help them ease the pressure on the housing situation, and at the same time will make labor less costly, and so it will boost China's competitiveness. But at the same time, of course, it benefits the rich, it benefits those in power. It does not benefit those people who have to work, because as labor becomes more abundant, labor costs comes down, and the labor situation, the protection will be worse, and all the rest. Right. So what I see is in China a somewhat rather concerning, I would say a rather concerning situation. In almost all other spheres, in terms of economics, I think China is doing quite decently. I don't think the American sanctions are doing a lot of harm to Chinese economy, and I think China is building a good, a decent, let's say, foreign relationships, bilateral trade agreements, etc. So I think all these things are on a good track. But the housing situation, this is a ticking bomb. It will explode, and the question is what it will bring with it when it explodes. One possibility is if there is a conflict in Taiwan. Let's just say, let me just say it, right? In Taiwan. If there's a conflict in Taiwan, I think it will be very difficult, almost impossible to keep the housing bubble afloat. I think we will see a dramatic, a spectacular fall in the housing market, and with it, we will see a reverse wealth effect. We will see a sharp decline in consumer spending in China. But I think if there is some sort of military operation, not necessarily invasion, but military operation, then I think this will be a scenario where the population will be able to absorb it because it is what is it called, rallying to the flag moment. I think this is perhaps one of the easiest ways for it to go out. Otherwise, to really manage this bubble down, it would take decades. It's going to be very difficult. And finally, let's talk about Russia's demands to sell its natural gas, in rubles. A very simple observation that I want to make is that the European leaders now are starting to, and I think perhaps fully are, in a remorse mode, right? They fully regret having acted so emotionally on the eve, in the aftermath of Russia's invasion of Ukraine. They are saying that they will be able to, they want to still buy Russian gas in euros, they want to pay in euros. But of course, I personally do not believe that Russia is bluffing. I think what will happen is that Russia will demand that that these European nations open accounts in Russian banks and in ruble accounts, that these countries buy ruble in the international market and really pay in rubles and using the Russian interbank messaging systems. I think the European leaders, most of them, I think, are understanding, have come to the understanding that they will have to do it. But they have to keep up the face, right? Because these countries, especially in Germany, but I think in some other countries too, they're not very, they're not very stable systems. They're not, in Germany, it's not a presidential system. And so the government can have, I think the parliament can have no confidence in the chancellor, and I think the chancellor could be replaced. In France, I think there is an upcoming election, and so Macron needs to have this tough face. So these guys will resist, and perhaps they will not pay. But after a couple of weeks, as the population start to complain about restrictions on their energy usage, and they will start complaining the continued rise in energy prices, I think the mood will change in the public, and this will give these European leaders the opportunity to finally make the concession. At that point, I would fully anticipate that the Russians will also give them an off-ramp, some type of face-saving measures. Perhaps they will say that, I don't know exactly what will happen, but there will be something that helps the European leaders to save face, while at the same time, essentially, they will be paying in rubles or gold. And so these are the 3 points that I want to discuss in today's podcast. Just one last point actually I want to make, and I forgot to make, is that I think that gold and silver, these monetary metals, are likely to be really interesting in the coming months and years. It is my opinion that globally there will be a crash in housing, stocks, etc. And this I have explained in depth in one of my previous podcasts. And when this crash finally happens, one thing I want to note is that gold and silver probably will also come down in price. But it will be very brief. And after that, they will take off. So currently, it is a very difficult situation for anyone who is managing funds. And the market absolutely is irrational. The amount of information that we're getting are already quite perplexing. But at the same time, a lot of this information are simply wrong. They are disinformation. And some of the worst offenders of disinformation can be found, well, if you go on Google News, you will see perhaps on the first page, all of them are part of this disinformation campaign. So it is a very difficult situation. I hope that everyone will be able to stay safe. I think this is absolutely not a time to get greedy. It is a time to be cautious and stay safe. When people become really fearful, when, as I said, that final crash comes, when the market no longer bounces, that is when you could perhaps think about entering. Well, this is my opinion. Obviously, I'm not giving any specific or even general investment advice. I'm not acting on any of it. Just let you know. So, well, thanks for listening and have a great day.